Hi, welcome. It's Mary Ellen McGonagle, Senior Managing Director of Equities here at Simpler Trading with your Friday Weekly Edge Show. Today, as usual, we're going to take a look at the broader markets, see where did we close the week and what we can be on the lookout for going forward as it relates to possible areas of support and upside resistance, as well as other factors. Also from there, we will go ahead and take a look at some of the key events that drove price action last week. And then last up, viewer question of the week. And this is all about how you can capitalize on these extreme moves that are taking place in specific stocks and how you can uncover those stocks poised to pop. So let's go ahead and take a look at some of the news from last week. First up, we did have earnings results coming in for a number of well-known companies, and the biggest movers in each of the broader market indexes were those companies that had reported earnings above estimates and, equally important, management guided growth estimates higher going forward. And I'll share with you some of those names and some of those areas as we move forward. Also, we did get economic data. Industrial production earlier in the week came in ahead of estimates, so we are still seeing growth in the industrial space. Also, however, housing starts, they did retreat. We are in a period where mortgage rates are on the rise, so hence a pullback in new housing. Also, strong earnings results. I talked about that. Netflix in particular was up over 28%. That in turn did boost a number of the other mega cap FANG stocks, and we're going to review them because many of them will be reporting their earnings estimates next week. Next week, also later in the week, the personal consumption expenditures number will be released for September. This is another closely watched data point for the Federal Reserve, so be on the lookout for that. So from here, let's go ahead and take a look. Where did we close the markets for the week? And here we are with the daily price chart of the S&P 500. And I want to show you a couple of important areas that are really going to determine what takes shape as we move forward. First up, we can see that this index did close the week above this pink simple moving average, and that is the 21-day simple moving average. And the relevance here is because two previous rallies that we've had here in the beginning of September as well as October, they were met with resistance at this 21-day simple moving average. This past week, we've been able to break above that, so constructive over the near term. Also, we can take a look at these momentum indicators. The RSI, that relative strength indicator, has closed above 50, and that is positive. And your faster moving stochastics, another momentum indicator, also closed above 50 and trending higher. So overall, we are in a position of this near-term rally potentially heading higher. However, from here, I do want to point out areas of upside resistance, and if we can break through that, it would point to a potential continuation of this counter trend or bear market rally. First up, your area at 3,800, that's your next area of resistance. If we can get above that, this 50-day simple moving average is going to be your next area of potential resistance. And at this time, it is sitting here at 3,886. So again, breaks above that, we will then in turn see a continuation of positive upside with the near-term momentum. All in tandem, we could see a continuation rally into next week. So let's dig beyond the markets and take a look at some of the underlying sectors. These are the 11 sectors in the S&P 500. It's a 2-month daily price chart view, and I've gone ahead and added an RSI. That's a relative strength indicator. I want to see where the relative strength is taking shape in the markets relative to weakness, and then also sector rotation, areas of weakness that are potentially moving to the forefront or areas of strength that are deteriorating. So first up, we can see energy up here at the forefront. It was the top performing sector for the week. Very confirmed uptrend taking shape here. And this is one of the few sectors, actually the only one, that is above each of its simple moving averages. Its outside momentum indicators in positive territory, all giving the group room to move higher. One of the biggest drivers here, as it is with other industry groups and stocks, is the fact that energy stocks have been reporting very strong earnings for the quarter, and this is anticipated to continue as the price of Brent crude oil has been elevated throughout this year, and the anticipation is pushing not only stocks that have reported quite a bit higher, but also there are a number of energy stocks due to report throughout the remainder of this week, and I'll share with you a couple of names that are acting quite constructively going into their reports next week. Also, taking a look at some other areas on the move, materials. This is XLB, and we are seeing a nice rally this week. All about earnings here as well. A number of well-known steel, aluminum companies have reported strong earnings and guided higher. So we are seeing a rally mode take shape in this group as well. The RSI now in positive territory. Talking about sector rotation, let's take a look at an industry group that had been down here in this weaker quartile, but is beginning to progress higher, and that is technology. This is XLK. We'll take a quick look at the weekly chart, and I will share with you that the group was up 6.5%. That's above the NASDAQ as well as the S&P 500's performance for the week. We can see the move above these shorter term moving averages, momentum now getting into positive territory with the RSI, and then that nice momentum shift, black line up through the red on this moving average, convergence, divergence. I'll share with you in our next segment which areas are driving the technology sector higher. And from here, let's go ahead and dig in a little bit further. I have a number of ETFs that I use that are very powerful in helping to uncover what is taking place beneath the surface, beneath those sectors. So again, strength to weakness with this 2-month daily price chart view. And up here, which has been in the forefront here for quite some time, is a daily price chart of the yield on that 10-year treasury. You can see it is still escalating higher. Not a good backdrop for the prospects of a continuation rally. We need only go back to this June into August period when we did experience a counter trend rally, and it was when interest rates were dropping. So we are keeping an eye on these interest rate backdrop, as it is highly relevant to the statistical probability of a continuation rally here. So moving along, we can take a look above among the broader market indices. The Dow Industrial Average is up here showing relative outperformance, the only broader market index that is now poised to break back above its 50-day simple moving average. Nice bullish action here on the RSI above 50, trending higher, and likewise with this MACD. The Dow Jones Industrial Average has shifted over the last 10-15 years. There are a number of names in there that are much more growth oriented as opposed to that industrial slant, and we'll take a look at some of the better performers in this particular index. So from here, we can also take a look at areas that are potentially on the move. Semiconductors were very firmly in this very lower quartile, moving up a little bit here this week, and we can see this nice V-shaped recovery potentially taking shape. The index, the Semiconductor SOXX ETF, has broken just above that 21-day simple moving average. Your outside momentum not quite positive yet. However, on the week, semiconductors did outperform, and this is also due to strong earnings among select stocks that I will get into as we move forward. And then also up here at the forefront, we can see the US dollar slipping into the close Friday, and on the week it was down just a bit. And this is another factor that is helping some of these commodity areas. I talked about steel and others that have come in with strong earnings. Another key component to keep in mind when looking at the markets as far as the backdrop and what can drive price action. Software stocks, also another area that contributed to technology trading higher. This is IGV, software ETF. Not overly dynamic looking chart, but we are certainly headed in the right direction. So from here, I did want to share with you those mega cap FANG stocks. We did have both Tesla reporting this week and Netflix, and here we are at the forefront. Let's take a quick look here at Netflix as it has now broken back above this longer term 200-day simple moving average, your RSI heading upward, and likewise your MACD up here in positive territory. Nice high volume characteristics. Of course, it is up, as I mentioned, about 28%. So you can use that intra-day chart as guidance. This is that gap up following their earnings on Wednesday. Very typical of the market, Wednesday and Thursday, where it fizzled into the close. Another rally attempt on Thursday, fizzling into the close. But if you are looking to play the move into these stocks after they report, you will, of course, want a bullish broader market backdrop, which we did have on Friday. And as an entry point on this 15-minute chart, you're going to want to be on the lookout for a break above these shorter term 5 and 13 simple moving averages, and then marry that with an RSI that's turning up above 50. Likewise with this MACD black line up through the red on Friday morning did point to a nice continuation rally. Netflix was up 8% on the day. So let's go back and take a look at some of these other stocks. Amazon is due to report earnings next week, and we can see the same dynamic with that RSI now trending up above that 50 and the stock above its shorter term moving averages. So it certainly does have some headwinds here with this downward trending 50-day as far as upside resistance, likewise with that 200, but we need only go back to this July rally and see that Amazon can in fact experience a move up to that 200-day, of course all dependent upon what takes shape in the broader markets. Last week, there was a dearth or a lack of inflation-related data, so the markets were really able to focus on these earnings that came in ahead of estimates and really move those stocks higher. We could see a different dynamic next week, so you will want to be aware. Apple also due to report next week, and this stock is very interesting to me simply because it was a true outperformer during this July into August rally, certainly among those mega cap names. And we can see here shaping up is another potential counter trend rally. We now have broken back above each of these 10 and 21-day moving averages, and the RSI just dipping now into positive territory. MACD had that nice black line up through the red, indicating a shift of this downtrend into an uptrend. Ideally, we'd like to see a move up here above that net neutral, but we could easily see a continuation rally. All eyes on Apple, as in addition to being a tech company, it's also consumer facing, so it will give a good gauge as to whether retailers are still in spending mode despite very high inflation. Tesla, an underperformer last week. They came out with numbers. Their sales were below estimates, and it really is a non-starter. Your momentum is still below any area where you can anticipate further upside. We could see this black line up through the red, but really among these larger cap names, Tesla is the weakest and really at this juncture not quite ready for prime time. And as we are still looking at these mega cap FANG stocks, I did want to point out to you two big components of the Dow Industrial Index, which is behaving quite constructively, and that is Microsoft and Apple are heavyweights in that index. So from here, with the viewer question of the week as far as uncovering these stocks that are having outsized returns and how you can capitalize, let's go ahead and take a look at a stock today that was up quite a bit, and that is Schlumberger. And this particular company did report strong earnings before the open, and we can see this gap up in response. So certainly as it relates to getting in front of potential big movers on a regular basis, my trading at this point is very short-term in nature, given that the backdrop remains bear market, but we are potentially in a counter trend rally. So you will want to pay attention to that earnings calendar. We did review a couple of the companies that larger cap names do to report, but let's go ahead and review Schlumberger, how it behaved after the release of their earnings, and what you can potentially be on the lookout for. First up, I'm focusing on this stock because the energy group we highlighted earlier is in an uptrend, so the possibility and statistically the ability of this stock to trade higher is going to be greater because of that backdrop of its group. So within this, go ahead and take a look at the intraday chart for SLB and how it did behave. We can see this gap up on the open. The other key component here is that the broader markets were in rally mode as well, which is another backdrop that helps. So we can see upon this gap up, the stock did pull back. However, throughout the day, the RSI remained up here in positive territory. Also, your momentum, your MACD, also remained in positive territory. And you can see a crossover may occur in this short-term view, black line down through the red, but that is not necessarily a sell signal. A sell signal on this super short-term 15-minute chart would be a negative RSI and in conjunction with that MACD crossover. So this crossover on its own is not a sell signal. We're still in positive territory here. And upon this gap up, you'll want to pay attention to the volume characteristics. And if you go back historically, the relative volume is very, very high, indicating that buyers want in, and as long as this stock remains above these shorter term 5 and 13 moving average with that RSI in positive territory, you do still have a strong possibility of further upside. So from here, we can take a look at a company in this particular industry group that is due to report next week, and that is Exxon. So let's go ahead and take a look at the chart of Exxon on this 15-minute, and we can see in conjunction with Schlumberger, it did have a nice rally, but held firm above these moving averages with your outside momentum in positive territory. So from here, if we see Exxon report strong numbers, you will want to be on the lookout for similar price action where the stock has a gap up or a similarly bullish move on very heavy volume. And as a possible buy point after that open, we can go ahead back and take a look at SLB, because generally in these intraday charts, you're well served to have a couple of time periods pass. In this case, 15 minutes. If that third bar trades higher than the high of that first one, statistically, the stock will continue to trade higher. So with XOM, we can take a look at that particular stock and note that already its momentum indicators are in positive territory here, poised to trade higher. You will want to use that intraday chart as your guide to help determine whether that stock is going to experience a nice continuation rally. Again, those companies reporting earnings have been your biggest movers here. That's it for this week. Everyone have a fantastic weekend. I will look for you again next weekend. Hey, Mary Ellen here with Simpler Trading. Thanks for watching the video. If you liked what you saw, go ahead and hit that like button and leave comments below. And if you'd like to be notified to future videos, you can hit that bell icon and subscribe. Don't leave without subscribing to my MEM Edge bi-weekly report. I do have a special trial offer. And for those who'd like to learn about trading live with us, you can go ahead to simplertrading.com to learn more.